What's up everyone and welcome back to the channel. Today we are going to go through the task 2 for the Citibank Investment Banking Virtual Experience Program. In my opinion, this is one of the more fun tasks, so to speak. There's not that much thinking involved here. We will be forecasting out some financial projections for our target company, which is Best Buy. I think the most difficult thing about this task is just having a little bit of attention to detail. There are a lot of numbers flowing through. You need to make sure that you are correctly subtracting expenses or adding them if they are negative numbers, and making sure that all the cells are linked correctly. One other thing that I will mention is about the formatting. So you'll see there'll be a bunch of blue numbers and there'll be a bunch of bold numbers. The general rule is that the blue numbers are essentially hard-coded into the model. The bolded figures are usually the ones undergoing a calculation. Sometimes you also see green, which is usually a link to another sheet. But I don't think we see that here. All right, that's about it. I'm gonna walk you through where all these numbers come from, how they're flowing through. Sounds pretty easy, so let's get after it. All right, so this is the template that we are given. It's very sort of stripped back. We really only have revenue, gross profit, EBITDA, and then this EBIT figure as well, and then the net income. We are missing sort of more detailed breakout of any operating expenses, which is totally fine for this purpose. So for some quick context behind this, the number that we're really interested in from a kind of valuation standpoint is the EBITDA number. Generally, when we're looking at valuing a company like this, the multiple for the overall valuation of the business is likely going to come off the last 12-month or the year-end EBITDA number. So this is really what we're after, and these additional pieces here give us some additional detail of how healthy the company is financially. The EBITDA number is a good measure of a company's profitability because it essentially excludes some things that a company like quote-unquote can't necessarily control, which is interest, the taxes it pays, and then you're also taking out, well, you're not yet including depreciation and amortization, which is really a non-cash expense. Now, there are certain companies that don't really have earnings, like startups and things, and they can have EV to sales multiples and things like that. But for a company that is essentially profitable and has some good history, EBITDA is generally a pretty good number to look at. One other thing to note is we have these income statement drivers down below. So we're gonna fill this out with some of our assumptions. And we begin with this column I that has our actual figures, and then we have projected. Now, one thing you wanna do, and something that has resulted in me making some mistakes, is you wanna just make sure that all your dates are totally lined up when you're working in a new model. So basically, let's start with our actuals. In this case, we're talking about 2022. So I'm gonna put this number in here, and then we can do one of these to fill this out. If you want to know how to add the A and the P here, what you can do is if you highlight all of these and then you go to custom number formats, more number formats, whatever, and then you go to custom, whatever the type is, you can just put in quotation marks at the end for the a P or an E sometimes you see, and then that's exactly how I got the A as well. All right, so as we move on, the first thing we need to do is just plug in some numbers. The first number we are given in the income statement is the revenue line. By the way, this screenshot I just took and put it in here just for the purposes of this video. But when you're provided a link to basically the 10K, so you can find this on one of the pages. There's a link that takes you to the financial statements on basically the summary page. There's a link that takes you to the financial statements in one of the summary pages, so just follow that, and then we're looking for the consolidated statement of earnings or the income statement. So the first number is 51,761. Let's go 51,761. 761, great. Notice how this number is blue because we're plugging it in. Then cost of sale is 40,121. 0.21. So here you just want to make sure that you are tracking how you're entering in your numbers. I'm just going to enter it in as a positive number, but you could put it as a negative, and then this would be an addition here, but you just want to make sure that that stays consistent all the way across for you. So we're going to leave this here, our margin, we just leave that as well. Let's just plug in the numbers first. Less sales SG&A, what do we have here? 8,635. Also notice that both of these are in millions of dollars, so I'm not making any changes as I'm plugging these in. If this was in thousands, for example, we would have to make this number a little bit bigger. So that's our EBITDA line, so don't need to do anything yet. And then depreciation and amortization, see. So here we're actually given this, and in the assumption we have depreciation is 800 million for 2022, held constant at 1.5%. So we can just do 800 million. The amortization is 100 million for 2022, held constant over the projected period. Just gonna do 100. This is our EBIT line. Okay, less interest expense, income. So interest expense is 25. We're gonna hold that constant. So here you see how we have expense in parentheses. So that's sort of indicating that this is going to be a negative number. So for this case, I am going to do negative 25. This comes through like that. Pre-tax income, we're going to calculate that. Less taxes is going to be, so this is our tax rate, 20%. So we are actually given the less taxes. We're actually given the tax for 2022. And this task, I guess, is a little bit ambiguous because you could plug this number in, but obviously we're missing certain things like the depreciation and amortization isn't really broken out here, it seems. So because of that, what I'm going to do is I will actually use this formula to get the tax, and then we'll subtract to get net income, rather than plugging this number in, because we did the same thing for these. So I'm just gonna follow through and use the assumptions and not just plug these numbers in. Okay, so next stage is essentially the income statement drivers. We know that our year-on-year revenue growth is gonna be 10%. So we can actually put in this number all the way across. If you just highlight this and do 10 and then do 10%, shift enter, you're gonna get 10% all the way across. COGS is a percent of revenue. So this is what I'm gonna do here. So we're gonna need a COGS figure because I wanna know exactly what we actually have. So what I'm gonna do, COGS figure will be this, our percent of revenue, 77.5, and we know we need to decline that margin all the way to 76%. So I'm going to plug that in here. All right. So here, what you can do is you can kind of figure out how many percentage points this goes down to every year for this 5-year period to get to 76%. There is another way of doing it that involves circularity. But I'm just going to do it my way, which is basically we want to take this minus the difference, and we want to lock this number. Do this minus this, divided by 5. 77 points. So it's going down by 0.3%. Let's go. This. I think I forgot to lock. Yeah, oops, forgot to lock it. So we need to make sure we lock this number too. There we go. So that's down by 0.3. Great. Cool. So SG&A as a percentage of revenue, we will have a number that's percent of revenue for this existing year. So with the SG&A line, once we have the 16.7% as margin sort of as a percent of revenue, then we can just copy these down, because that will bring this down to, okay, not quite. So now we just want to make sure that we also change our fixed cells to 34. This one and this one. Press Shift Enter. Just check if that's actually what it did. Okay, looks good. All right, depreciation as a percent of revenue. So we know that it's 800 million, and then holding constant at 1% as a percent of revenue. So what I'm gonna do is I'm gonna do 800 right here to get the margin. So it is 1.5. And then for the rest, I'm just going to just import 1.5. Oops. 1.5%. And then Control Enter will fill this whole thing out. Great. Amortization and interest expense. So these we are holding constant across the period. So I'm just going to do this as 100. It's going to do it as percent. I can change that later. So Control Enter. And I'm going to do this as 25. Okay. We don't really need just 100. And I don't want that to be italicized. All right. That looks good. Okay, so once we have that, we can just forecast the rest of this out. So we have this growing at 10%, so we can take this 1 plus 10 actually, sorry. Plus 10. Great, and then we can actually do it like this. This will be this times this number. Fill that out, just make sure it's right. It's great, and then we can just do gross profit. It will be our revenue less COGS. All right, and then margin. We can do this divided by this. Okay, that looks okay. And so we're just, this is sort of what I said is a somewhat fun part, I guess. So we're just plugging some numbers in. Once we've set everything up, it's pretty easy. That's right, SG&A. Yeah, I think that's good. And now so for the EBITDA line, we basically have our gross profit, then we're taking out this SG&A. Let's see, this should be this on this. That looks fine. All right, these now. So these actually, so this one will be 1.5% times this. Okay, 100 is going to be, we're just going to link them all. You could just, enter in 100, but if we wanted to change that quickly and have it roll through, this way is better, because then we can just change it once down there. Gotcha. Okay. Now we have this, we're taking out, because it's EBIT, we're taking out depreciation and amortization. Getting our margin here. 4%. Okay, that's looking okay. Here we can just enter in 25. So actually, we want to keep that negative. Great. So our pre-tax income is going to be this minus. Sorry, this time it's actually a plus. So this is what I was talking about before. You just want to make sure that that's all accurately flowing through. Now, as I said, now we're up to this tax rate. What we're going to do is actually just going to do this one. I'm going to fix this, multiply it by the pre-income tax to get our taxes, and then net income will be this, subtracting our tax. 3, 2, 4. All right, great. So this is looking pretty solid. So we're basically finished. That's it for this exercise. One other thing that I will say is I like to keep these margins italicized. So to highlight the row, you can do Shift Space, and then I just do Control I to italicize those. Okay. Awesome. Well, thank you guys so much for watching. That's it for task 2 of the Citibank Investment Banking Virtual Internship. Please let me know if you guys have any questions, comments, or concerns. I hope this was useful. Let me know if you guys have any questions on the shortcuts that I was using. If I didn't explain them very well during the video, I will gladly respond to your comments. Thanks again, and I'll see you on the next one.